All right, so part 3 of the 3 pillars of financial success and strategy with Chelsea Williams of Core Solutions Group. So if you've missed part 1 on the foundation, go back and watch it. We just did part 2 on the framework. A really important piece on how you think about your money is crucial to all of this. So take a look at those first 2 episodes, and we're going to wrap it up here with the 3rd pillar, which is the flywheel.
All good things with BBB helps you be a better business.
So Chelsea Williams, Core Solutions Group, thanks for hanging out and doing all of this fantastic information. So the flywheel, is a powerful visual to all of this. Can you talk about what it represents in the context of the 3 pillars?
Yeah. So we've kind of begun these with the idea of like building your financial home, right? And I talk about the foundation, you have to lay solid. Then the framework is what goes up next, really our layout, our design, how we keep things intact. The flywheel, if you think about it in that metaphor, is like the things we have to do to keep up our home, to take care of it, the HVAC, the roof, like all of the things to make sure it stays the way it needs to stay, right? And I got the inspiration behind the term, the flywheel, from the book Good to Great by Tim Collins. Have you read this?
Yes.
I read this book and I was like blown away. So first of all, I'm a science nerd. Like I love science, biology, neurology, human behavior, all of the things. And then so you combine science and business and I'm like hooked.
Yeah. It's like that is where all the good stuff is.
In it. And so in this book, he took a scientific hypothesis approach to answer the question, why is it that some businesses thrive and succeed over such a long period of time? And so in the book, he studied publicly traded companies. That was his control for his study, which is fair. Everybody has the same baseline, right?
Okay.
And he answered that question. And what he ended up coming up with was the flywheel. And he talks about the different pieces of the flywheel. And so it's really interesting. I would definitely recommend it if you're a reader or listen to it. And even though we're small business, all of the principles still apply. Like you can scale them all down. And I've worked with hundreds of business owners over almost 20 years now. And I'm just reading this book and I'm like, oh my gosh, this is so true. Even in small business, it's amazing. Like if we all only knew about the flywheel. And so that's how it came to be called for me, the flywheel. And one other thing I have to say when I talk about this book, I love the fact that when he started that study, he's like, I am going to omit leadership as a variable. You remember that part of the book?
Yeah, didn't he focus a lot on getting the right people in the right seats on the bus?
I love the bus analogy.
Yeah.
Yes. Yeah, which is important. But like he went into this study and he's like, I don't care who was leading. I don't want that to be a variable. But very quickly he realized, no, it is a variable. And they didn't think it was a variable because these publicly traded companies like Walmart and General Electric, like they've been running for so long, they've had so many leadership people, right? But what they found is that leadership is very important, number one. Number two, the reason it worked for these corporations is because they systematically found leaders that fell in line with their core values and their beliefs. And so it was so powerful. And so with the flywheel, as it applies to small business, like we are leaders. We are leading our business. And the sun rises and sets on leadership. I think it was John Maxwell that said that. Yeah. And it's so true. Like as a business owner, whenever anything happens, you first have to look in the mirror.
Yeah.
We have to own every result that we see in our business. So when it comes to money, the flywheel is how we own our financial piece of the business. And it keeps us on top of the foundation and the framework, because we talked in the earlier episodes about how everything is always changing. Yeah. And as soon as we have our footing, COVID hits or tariffs get imposed or AI's here and we don't know how the hell to deal with it and what to do with it. There's always going to be something. So the flywheel is what we put into place to keep everything running and spinning like a fine-tuned, well-oiled machine, so that we have the capacity to look up and out into the future and anticipate what's coming. And so the flywheel is made up of KPIs, key performance indicators. It is made up of those monthly financial dates. So it's the rituals of money, right?
Habits.
The monthly money dates, the quarterly pivots, the annual check-ins.
Okay.
And so to start with the first one, KPIs, that stands for key performance indicators. Every single business has these.
Oh yeah.
And they are the needle movers, right? Like,
Yeah, I think, can you talk about the importance of choosing your KPIs? Because you can have this, like you were talking about your meeting in the last episode of Framework, of how you can really study every little thing and then it doesn't really move any needles.
yeah. It is important. And this is another area where I encourage business owners, if you have a team, like having a team is a game changer. It will level you up. It's a blessing because these people think of things that you would have never thought about. And, you know, you can really lean on them. I lean on my team. I have a team of 20 and I lean on them heavily to be like, what should we be looking at? Is this important? Is it not important? The fact of the matter is you should always be looking for KPIs that you should be tracking that you're not, or KPIs that you are tracking that don't actually matter to the bottom line. Because they can matter. Like, you may look at your marketing and you're like, ooh, that reel got 20,000 views. I love hearing that, but it didn't bring in a damn client, so who cares?
Right.
You know, not directly. So you really have to ask yourself those two questions. But there are kind of like a core set of KPIs that I can't think of any business that shouldn't track them, that are pretty universal. But then again, you really got to ask yourself with your business. Like, I deal with a lot of law firms. And one of the KPIs that law firms have to look at that other businesses don't is the lifetime of their case and all the milestones in between, so that no case goes astray and takes too long. Like, they've realized they have to track milestones with case progression. So especially if you have a product-based business, like if you're selling things, like the KPIs are so important. But some of them that absolutely every business should be tracking are things like number of prospects and lead source. Where are people hearing about you? How are they hearing about you? Are you even asking? Like, you should be.
Yeah.
Because that is going to help you dictate where you invest marketing dollars at. And that's also going to help you answer what's working in marketing and what's not. So you should know how people are hearing about you, how many people are reaching out within a week, a month, or whatever you want to look at there. And then conversion rates are huge.
Right.
So on the last episode, we talked about the client that came to me making $7 million a year and had to take out a loan and skip a paycheck because of one bad month. Their conversion rates were terrible. Increasing their conversion rates alone, I think it equated to like $350,000 a year that they had lost that they could recoup. So conversions are the number of people that come to you interested that actually end up paying. And there's a lot to learn there and a lot to leverage.
There's a lot to study with that. You know, what kind of experience do they have coming to you and requesting your services or your call or something like that, and the tone of voice they hear. I mean, there's so many variables in that alone that can really move the needle.
Yeah. And that's so if you're a business and you don't do your sales directly, like if you're the owner but you're not the salesperson, that's a KPI you should be tracking on your salesperson. That is a unit of measurement for that position. And even within all of the 3 KPIs that we just talked about, there's probably 10 or so in there that you could be tracking. Like, I have a client that they do webinars every month. So they don't just track leads and conversions. They track how many people registered for the webinar, how many people showed up for the webinar, how many people that showed up booked a prospect, and how many people that booked a prospect converted.
Yeah.
So they're able to predict, if I have 100 people sign up for this webinar, 70 are going to show up, 20 are going to book a consult, 10 are going to be paid clients. They
That's
have
your
it
funnel.
down to a science.
Your sales funnel. Yeah. All right. So conversion hits to your website, or people coming to you. You should be tracking any other basic KPIs everyone should be looking at.
Yeah, everyone, like on your team, that's really important. Every position has a unit of measure. That's how you measure their success and their effectiveness in your organization. So, people that are doing income producing work, it's a little bit easier.
Yeah.
Some people, it looks a little bit different. Like, how many emails did you manage that day? You know, and again, work with them, ask them, how do I measure your success? And they can generally help you go back and forth to figure that out. And then when it comes to your money, there are a few key KPIs. So marketing as a percentage of revenue, that's an important one to track.
Is there a general recommendation?
There is 10%, and I hate it. I hate that general recommendation because 10%, if it's not working, it's wasted.
Yeah.
If it's working really, really well and you can handle more, why not turn it up? You know, so it's very subjective. But again, that's why we track these KPIs.
General, you know, review point, I guess.
It's a cookie cutter answer that you can consider, but tailor it to yourself.
Yeah.
And again, measure, because just because you spend 10% in marketing doesn't mean it's going to work.
Yeah, going back to that framework, I think is key here. Like, don't just throw the money at the problem.
Yes.
Right? Coming up with that strategy of, okay, we're going to spend the money here. What is the expectation? You know, do we have somebody to manage, if it works, the success of that?
Yes.
Yeah.
Yep, exactly. Then
Okay.
your team cost as a percentage of revenue, super important. Your net income as a percentage of revenue, and your cash flow. So those are the money ones.
Very good. Very good. So, you know, you said everything so far is sequential, you know, starting with the foundation, moving to the framework, and we're at the flywheel. How does the business know when they're ready to start working on their flywheel?
When they have a budget, a forecast, and a cash management plan, and a tax strategist in place. Those are all
Right.
the things we're managing.
If we
here.
have these answers, we just start on the flywheel right away?
Yep.
Or do you wait a year or anything like that?
No, right away. And I mean, KPIs, you can start collecting KPIs anytime. They're not going to be very useful if you don't have a visual of your money and your numbers to that, right? But it's a, you know, start, sure.
Yeah.
You can start that whenever.
Yeah.
And so then the monthly financial review, we already talked about in the first one. But that's one of the like money rituals that are within the flywheel. Quarterly pivots are worth talking about. So quarterly pivots, from a technical point of view, it is where we meet with our tax people to stay on top of our estimated tax payments. And I will speak to that in terms of when we think about estimated tax payments, a lot of times tax people will give us these paper vouchers based on our prior year tax return, and they'll be like, yeah, pay this much each quarter and I'll talk to you next year. Right now, while those vouchers are designed to keep you from paying penalties and interest, which is important, what they are not designed to do is to keep you from overpaying or underpaying. You can end
So
up.
they're estimates based on last year's revenue?
The vouchers are based on last year's situation. Let's take COVID, for example. A lot of businesses, most businesses, their revenue tanked
Right.
the year of COVID. Very few, their revenue blew up over COVID. Those vouchers kept them from penalties and interest, but they did not keep most people from paying tens of thousands of dollars in taxes they didn't need to. They could have used that in their bank accounts. And for the ones that revenue blew up, it didn't keep them from getting a tens of thousands of dollars in surprise tax bill.
Yeah.
Like, forget about the penalties and interest. That surprise tax bill will bite you in the butt.
Yeah.
So for estimated tax payments, what I recommend clients do is quarter 2 and quarter 4, go to your tax person, say, I do not want to make these based on assumptions from last year. I would like you to look at my actual real life numbers to date and plug in my information and tell me what I actually owe to
Yeah.
date. So that'll solve that problem. So during the quarterly pivots, we're doing the estimated tax protocols, but we're also looking at our quarterly performance. So when you look at the framework and you do that budget and that framework forecast, when you get those done, you put those into your accounting software. Like QuickBooks, it's called the Budget Manager, the budget feature. So you're actually inputting your budget and your forecast into your accounting software so that now you get a monthly budget variance report that you should be looking at every month. That report says what you did in real life, what you thought you were going to do, and the difference. That's where we learn and continue the dialing in process of the forecast. So every quarter, part of the quarterly pivot is, let me look at my budget variance for that entire quarter and talk about how I did. And
With
then
the team?
with the team. Yeah, I definitely recommend with the team. So that you can get out of the month-to-month weeds and into that 10,000-foot view and apply everything you learn to future projections.
how do you, some of the things we talked about before, that marketing investment or that team investment, those things not bringing in instant overnight revenue. When you're looking at your quarterly pivot, what is the best way to not panic and say, oh, that's not working, we're not seeing it here.
Yeah.
And then pull back.
I think it starts from the beginning. When you make a decision like marketing, know that you're going to budget $5,000 a month for the next year, but that you're not going to take it seriously until at least 3 months in. That way there is no panic, because you already knew, look, I'm going to give this 3 months and then I'm going to start looking at it seriously. And then I'm going to start asking questions. Mm-hmm. And so like with marketing, lean on the person that's helping you with marketing. And I'll tell people, say you're working with an SEO person or somebody that specializes in Google LSAs, local service ads. That's a paid Google advertising modality. Ask them what standard you should hold them to. Say, okay, I understand it's going to take a couple months for this to matter. Once that couple months is up, what can I expect as a result? Mm-hmm. Collaborate with them, just like how we talked about establishing KPIs with your staff. Establish the KPIs and the expectations with your vendors as well. It gives you a way to hold them accountable and have that dialogue and ask questions. Like I work with I have a CMO, a chief marketing officer. I have a marketing manager, and my marketing manager has a marketing assistant. I will meet with my CMO and my marketing manager once a month, and I will ask questions, because the truth is she doesn't know what I know. Nobody knows what I know or what I'm thinking, my ideas, you know what I mean? And so just sitting in that meeting, I can ask questions or propose ideas that will get more creative juices spinning and get us to think about doing something a little bit differently that might work better. And that's only because, again, like nobody's in my head but me. Number one. Number two, we can't abdicate our role in our businesses. We have to be involved to some degree in these things. Mm-hmm. So ask questions, and that's what quarterly pivots are for. It's like big picture. What do we need to focus on next quarter, and what can we learn from this past quarter? There's another book that plays into how I designed all this stuff called Traction by Gino Wickman. Have you read it?
I have not read Traction, but I think you mentioned it.
It's based on EOS, the Entrepreneur Operating System. And in his book, he talks about the fact that people lose motivation every 3 months. Again, it's something that's been measured and studied in the world of science. Motivation is like a bath. We've all heard this, right? You don't just get motivated and you're motivated for the rest of your life. You have to motivate yourself, right? And so that's part of the flywheel, is that remotivation. And so the book talks about every 3 months, you and your team need to be motivated. And so we have what we call rocks. These are like our big achievements we want to get done this next quarter. And so that's where the quarterly pivots were like, okay, these were our rocks for this quarter. And these are the ones that we didn't do. I also love about the system, it forces you to look at issues. So like in my company, I talked about the pod meetings in a previous episode. In those meetings, we lay our issues. We don't ignore our issues. We don't turn a shoulder. We don't avoid them. We bring them to the table and we keep them on a list of what the known issues are. And so, that's part of the process. Let's acknowledge and face what's not working, and let's get creative and strategize on things we can do to get it to work.
I love that. And it gives everybody, the team, an opportunity to organize their thoughts,
yes,
and hopefully come with solutions as well.
They bring some of the best solutions.
Yeah.
You can't be, everything can't fall on your shoulders as the leader. Mm-hmm. when you're that big and when you have that many team members. Yeah. We gotta lean into it.
All right, and then the annual checkup. So you don't want to get to the end of the year and be like, well, we did or we didn't.
Yes. Yes. So yeah, by the time the end of the year comes around and you're looking at things monthly and you're keeping tabs on things quarterly, the end of the year is really about just backing up even more and looking at what do I want to do next year and in the next 3 years. Mm-hmm. So like for our clients that are in our fractional CFO program, we have a rolling 3-year forecast. We are always looking 3 years into the future and playing with scenarios based on what's happening now and it's always changing. It is not set in stone.
Yeah.
But this is how we get to that place. I think we talked about it in either one or two, I can't remember, of like really being able, like positioning yourself to pivot, truly. So I had used the example of COVID. When you are looking that far out, you can manage and pivot around whatever happens now. Because once you've done it for so long, you've asked yourself all the questions. What if this happens? What if that happens? This happens, and we created a strategy so we could always do that again. You know, people get creative. I was talking to an attorney at an event I was at last week. He is a PI attorney. And when COVID hit, courts shut down. So, and PI is volatile. This is like when you get into an accident and you call an attorney and 2 years later you see some money. This is that guy. And so when COVID hit, the courts shut down because he understood the time value of money. And instead of accepting, oh, well, I'm not going to see any money in my law firm until COVID decides to pass, he called up his clients and he said, look, the courts are shutting down. We have no idea how long this is going to go on. This is how the time value of money works. You should settle for less now. And he navigated his way around that creatively while doing a good thing for his clients, because had they waited however many years, they were already going to wait a few years. COVID was going to set them back even further. Based on the time value of money, it was in their best interest to settle now instead of chance it and wait for however many years to get their money.
Right.
But because he understood that, and he had padding, and he wasn't in a financial bind, he wasn't one bad month away from taking out a loan, he had the mental space to focus on a solution instead of putting out fires. And that is what, when you really look out that far and you force your brain to think about what 3 years looks like from now, you've thought about these things. And then furthermore, as a business owner, the fact that somebody's going to figure it out, why not you? Like when COVID hit, everybody's not going under. I can look at, again, I deal with law firms specifically in my business. Some people were free, even with AI. They're like, oh, AI is going to take my job. No, it's not. AI is not going to make businesses go away. It's not, and somebody is going to embrace it, learn how to incorporate it into their business model, and thrive. Mm-hmm. There's always a way.
Yeah.
And so this is just positioning yourself to be at the table.
What do you suggest to someone who has a hard time getting creative when we're looking ahead the next 3 years? How do you encourage them to be creative? Think outside the box.
Everybody is creative, even if you think you aren't. And exercising your creativity is just like exercising anything else. Stop avoiding thinking outside of the box. Start talking about it. Start somewhere. You have to practice it. If it's with your team, give them a scenario. Give yourself a scenario. What would you do? Who do we need to hire? What do you need to delegate? Where's the bottleneck gonna be? Give yourself, look, it's not far out. Like the scenarios that you could throw yourself and your team, it's not far-fetched. So instead of being surprised, think about the scenario, talk about it. You can practice this at home, but at the dinner table with your family, like get these juices going. So, stop leaning on technology, stop throwing money at the problems, and start like getting your own creative wheels spinning.
Yeah, I like that. And leaning on the team.
Yeah.
What if we're stuck? What if we've been at this plateau? How do we bump up?
When I think about this, I think about that saying that says, your beliefs dictate your thoughts, dictate your words, your actions, your habits, your character, your destiny. When you put these 3 pillars in place, you are hacking that sequence at the habits. You are dressing for the job you want, not the job you have. And by doing that, you are forcing yourself to follow what it would take for you to be successful and let your mind and your beliefs catch up. It's also a really good way to hack the system and expose your beliefs around money. If you follow this system, at any point when you feel resistance, question it, because I guarantee you can trace it back to a belief. And once you address that belief, things will change and unlock for you. So my advice would be apply the framework, because if you do and you are stuck, the framework is going to force you to answer the question, why am I stuck? And then it's going to force you to creatively come up with a solution to get unstuck.
Mm-hmm. When you talked about going back to the beliefs, what was it you said before about there are no problems in your money? What was it you said?
There is no such thing as a money problem, only problems showing up in your money.
Yes.
It's true.
Yes, that's it.
Yeah.
And going back to why are we here?
Yeah.
And asking why.
Yeah, money is a good scapegoat. It's easy to blame money. It really is. It goes back to the belief that some people have of money is the root of all evil, or people with a lot of money are evil. It makes you evil. No, it doesn't. It makes you easier to exhibit the evil that was already there.
Wow.
Mic drop.
Wow.
Yeah. So, I mean, it's a good practice and it's a good exercise, and everybody has them. So start somewhere.
So yeah, start somewhere. I think that's the key takeaway for all of this. If you're feeling overwhelmed with any part of managing your money, just start somewhere. Start with the foundation. Like you said, don't strive for perfection. You're not going to get it right away. And you might not, it's a learning process. I think what you said about committing to being better, you're going to learn through that process, and you're going to want to learn more about it, get more educated, and want to be better at all of these things. Any other closing thoughts that you want people to feel inspired by?
It doesn't matter who you are, where you come from, the mistakes that you've made. There is always a way out, and money can be the biggest mirror. It is not the enemy. It is the roadmap to solving the problems it exposes.
If you need any help with this, obviously Chelsea Williams at Core Solutions Group knows her stuff and has a team ready to deploy these things one-on-one, and different cohorts and classes that you can take through her business right here in Bloomington. So thanks for listening to the podcast. I hope you enjoyed all 3 parts of this and it has helped you become a better business. Thanks for watching.
All Good Things with BBB helps you be a better business.